What's going on, guys, and welcome back to another video. So today we're going to give updates on the iShares Global Clean Energy ETF, ticker symbol INRG or ICLN, depending on what ticker you hold. We'll give an update on my current holdings and what I've been doing lately with this ETF. We'll then discuss some news and catalysts going forward for this ETF, which will definitely impact their share price. We'll give an update, a very brief update that is, on their updated holdings. Now, I did mention this in a prior video on this ETF, which I'll link in the description below, but I'll just give a very brief update on that as well. And finally, we'll give my plan going forward for this ETF. And with all that being said, let's dive right on into today's video. As it stands, the iShares Global Clean Energy ETF is one of 3 ETFs out of my 33 holdings. We can see here at the moment we have about €9,100 invested in the market. 7,767 of that is my own capital, and 1,300 of that is profit, or 17.1%, and €75 in free funds. Now we can see just behind the screen here that we're currently trading at about £9.41, as this is traded on the London Stock Exchange. This ETF is one of 3 energy plays I currently hold. We can see at the moment we're up about 6.9% overall, with the 2 older school energy companies in the form of ExxonMobil up over 70%, so I'm pleasantly surprised at that one. And Chevron is up 44% as well, which is very good in my opinion. It's just a pity we have small amounts of capital at play here. But we can see the ETF we're going to discuss today is currently down at 9.3%. Now that might look bad at the outset, but let's look a little deeper into this. As it stands, we currently have just under 40 shares of this ETF, as we can see on the left here, down 9.4% or €44. Now this is one of the few that are in the red at the moment in my overall holding, should I say. But again, that just poses great opportunities time and time again. I've said this many times, and again, over the long term, consistent small buys when the price is down makes a big overall difference in the long term. We can see at the moment it's trading at about £9.40, as you mentioned earlier, and my average price here is the dotted line, currently at about £10.30. Now I do want to get this as close or below the £10 mark as possible over the next few weeks, so that's kind of my plan of action there. Now there's been many reasons why over the last 3 months the share price has dropped from, let's say, the £13 mark, and it was even up as far as the £15 mark only a few months back, but it has dropped down time and time again. And that just shows, again, if you put small amounts of capital the whole way down, you're actually getting a better overall average cost. So don't lump in all your capital in any investment, in my opinion. So again, we'll kind of discuss the factors which led to this downfall over the last few weeks or months. Kind of 2 main ones really were the overall Plug Power, the top holding at that time. There was 30 holdings. Now again, that has been upgraded to 80 plus holdings, which we'll discuss in a few seconds. But again, that was their top holding, and also the downgrade or the kind of consolidation after Biden gave the kind of clean energy sector a hype that has to consolidate, and that has happened. Now again, this is only the 3-month chart here. You need to look longer than 3 months if you're a long-term investor. We can see the 1-year chart here, where it shows that ETF is up over 96% since this time 365 days ago. Now that's very impressive, although it was up at highs of £15 or so only a few months back. It is currently at £9.40, which since this time last year is after over nearly doubling in price, 96%, so it's close to the 100% mark. So all in all, over the last year, this ETF has done very well. One downfall of this ETF in the past was that it only had 30 holdings. Now in a normal ETF, 30 holdings would be just fine, but in this clean energy sector, there's so many subsectors, and it's kind of a new market as such at the moment. So there is a lot of volatility, hence why I wanted to have a bigger holdings, and they've certainly done that. We can see here that ICLN or INRG, depending on what ticker you have increased the overall benchmark from about 30 holdings up to 82. So we can see the kind of synopsis in this article here is that the benchmark was updated in mid-April to include up to another 50 plus holdings, which might seem a bit kind of overkill to have 80 plus holdings, but I kind of welcome this on board. Particularly, we saw what damages it had when it had the 30 holdings, when Plug Power, the top holdings, had fund accounting errors, and it really did have a disastrous effect on the ETF. So I was definitely welcoming for having these extra holdings. We can also see the revised index broadens diversification, now that's kind of goes without saying. And also, there's a significant exposure to hydrogen trend and traditional renewables at the same time. So this article certainly does show that this ETF is definitely going in the right direction. And we now have just a very brief look at these new holdings. There definitely has been a big shift in their overall holdings. We can see, for example, their top holding prior to this change in their 30 stock ETF was Plug Power, which now sits probably in nearly 10th position. Now, again, I discussed the reasons why this happened. And again, we can see the top holdings at the moment is Vista's Wind Systems, Ørsted, Enfys Energy, and Excel Energy is the kind of top holdings at the moment here now. Now, if you would like me to, I can definitely make an in-depth, detailed video on, let's say, the top 3 to 5 holdings. So if you'd like that, just comment below and I'll be sure to make a video on that. Now, obviously as well, with the extra stocks or holdings gone up to 50 plus more, this will definitely help spread out the diversification across the globe in terms of exposure or geographical exposure. We can see now that the US doesn't have as much as a stronghold in this ETF. It currently now has 37.9% of the holdings, which again is still a lot, but it's kind of a given considering how much of an impact the US has on this global economy. We then have the likes of some European countries in the form of Denmark, Spain. We even then have Canada, China, Italy, Portugal, etc. So it's kind of better spread out overall. Even though the overall ETFs or stocks in the clean energy sector have consolidated over the last few weeks and even months since the hype of the presidential campaign and Biden being the new president, we can still see here that it's still lingering in the background and will act as a huge catalyst going forward if Biden kind of continues with this clean energy kind of campaign. We can even see on the left here that if this law is signed, there will be a further $2 trillion in infrastructural proposal and will rank as one of the largest federal efforts ever to curb the country's greenhouse gases. So definitely this can't be overlooked or overshadowed. Even though the kind of hype is gone, this is still the biggest catalyst definitely for clean energy going forward. We can also see one of the main reasons, besides Plug Power's dismal affairs, is that one of the main reasons why this ETF has went to 80 holdings was because of liquidity risk and over-concentration, which again, Plug Power just showed this as an exact point here when there was 30 stocks. It was way too dominant in an ETF style environment. Now we can see even here that there's over 12 billion between the two main /INRG or ICLNs. There's over 12 billion tracking these two strategies. So definitely just to have 30 holdings here was definitely not enough, and there was over concentration and they needed to be diluted down, hence why there is now over 80 holdings in this ETF. It wasn't just this volatility or liquidation that was the reason why they added more holdings. It was also to have some non-pure clean energy stocks, so obviously stocks that are trying to get into clean energy but aren't solely based around clean energy completely. Now this will definitely help reduce volatility as well, especially if the overall kind of complete clean energy stocks go down in value. This will help kind of act as some bit of a buffer, so I'm definitely welcoming this 80 holdings ETF. So that then kind of brings me to the conclusion of what I'll be doing with this ETF going forward. Now I will be holding this ETF long term definitely. As I said earlier, we have just under 40 shares at the moment and an average price of about £10.26 or so, or pence or so. But again, I want to get this as close as possible to the £10 mark and even below it as time goes on. But however, saying that, I have been investing consistently over the last few months or so, again, all tiny amounts, but slowly investing in here to get my average cost down and down. However, the overall price kept coming down with me, so I didn't get much parity there. However, I still did get a cheaper price, and I will be definitely investing more here, but not for the next week or so. Mainly because I have been investing in here a lot over the last few months, so I do want to give it some bit of a cool off period. Again, this gives a benefit either way. For example, if it's currently trading at £9.40 or so, if it drops further down, let's say to the £9 mark over the next week, I'm getting in at an even cheaper price. But if it goes back up in value over the next week and I didn't buy in anymore, I'm still getting my current shares or holdings up further into the green again. So either way, it's a win-win situation, and patience is definitely key in this long-term investing. By doing this also, it will give me more opportunities and time to invest into my other 32 holdings, which definitely is of importance as well, obviously. So again, just kind of some brief synopsis of some targets or price targets. I do want to get this down to below the £10 mark as soon as I can, and I do want to get it up to about 50 shares. So again, at the moment, just as a summary, our average price is £10.26, so I need to shave off 26 pence off there. And again, I need to get another 10 or so shares in this ETF as well. Again, these are only kind of very short-term figures. Maybe by the end of this month, I do want to reach these targets. And again, obviously, if the price goes back up in value, we won't be getting an average cost of £10. But either way, I'm still winning long-term. So again, that's the main thing of these kind of dollar cost average long-term investing, is to have patience and consistency and to not lump all of your capital in at once. Slowly trickle feed funds in, and you're definitely in the long term that will pay dividends. So with that being said, that's the end of today's video. I just want to give a very brief update on the iShares Global Clean Energy ETF, ticker symbol INRG or ICLN. I'd be very interested to know in the comment section below your thoughts on this ETF going forward. If you sold out of the ETF and kind of got fed up of it continue to go down in value, or if you took this as a good opportunity to dollar cost average and hold long term. So I'd be very interested to know in the comment section below how many shares you hold in this ETF and your plans going forward if you're going to buy or sell this ETF. Thanks very much, enjoy your Tuesday, and I will see y'all in tomorrow's video.